episode of our weekly podcast and the continuation of our 18 plus year old, the Consumer Fight Back radio talk show. We are coming to you courtesy of First Stone Credit Counseling. That's FSCC. And it's doing business as, or DBA First Stone Credit Repair, DBA First Stone Education, also the People's Credit Bureau. Topics today are payday loans and why you don't want one of those, and credit cards, also known as the good, the bad, and the ugly. Let me give you our phone number and our email. The phone number is area code 972-235-1188. That's 972-235-1188. Call us now. Call us today. Our email address is fscc@firststone.com. Now in international phonetics, that's Foxtrot Sierra Charlie Charlie at first the word stone the word.com. And you're up.
Okay, well, I'm JD. I'm supposed to be the lady with opinions, okay? And we also have with us today the Shadow. Shadow, do you want to say hello?
Hello.
Okay. All right, we want you to know that we're the modern version of talk radio with 18 plus years experience educating consumers, and we've been in the credit repair and credit restoration business for over 35 years. And we also want you to know that we are nationwide, and we have headquarters near a suburb of Dallas, Texas, called Plano. We continue to conduct credit repair work because it is good for America. Now, again, our topics today, payday loans. Number 2 topic is credit cards, the good, the bad, the ugly. Actually, you could say the good, the bad, the ugly for payday loans as well. When we get into this, you'll see why. Okay. You can call us at area code 972-235-1188. Now, payday loans. Why do people get payday loans? It's really called an emergency debt, a trap for many. And I say emergency because many consumers get their first payday loan due to an emergency. We're going to tell you a whole lot about payday loans and why you need to think twice before you get one. Payday loans require no collateral, only a driver's license, and proof of a paycheck. Most payday loans average upwards to in interest to 400%, compared if you can get a bank loan, which may be 10% or maybe 28%. Now, credit cards usually charge around 15%. So, surprisingly, there are 23,000 payday loans currently in the United States. We're going to talk about different states and how they rule on payday loans. Ohio has the largest number of payday loans with an average interest rate of, get this, 667%. There are 13 states that prohibit payday loans: Arizona, Arkansas, Georgia, Maryland, Massachusetts, New Jersey, and North Carolina, Pennsylvania, West Virginia, and District of Columbia. Good for them. There are 37 states that allow payday loans but have passed laws to place a cap on the interest that they charge. Some states have no limit on how the interest rate is at all. Some states charge between 200% and as high as, oh my goodness, 1,380%. Nebraska was able to get up a petition and received enough signatures to get a law placed on the voting ballot to cap the interest rate to 36% for their state. The average payday loan amount across the nation, and this was really surprising to me, that as low as $350 is what people need when they go to get a payday loan. Only 1% of consumers pay back the payday loan within the 2-week period that is due. That's where they get in trouble. They can't pay it back and they have to refinance. Some people borrow as many as 17 payday loans per year. Oh goodness, okay. Payday loan company lenders make their money from the consumers not being able to make their loan payment on time, and therefore they renew and they repeat this process over and over, and it becomes a snowball effect. And they get charged more fees and larger interest rates than what was quoted on the original payday loan note. This is where the consumers get into trouble, because it takes tracking what you're borrowing originally and adding on the new fees. And a lot of people don't keep up with that. They just go in, they know they're in trouble, they just refinance it, and the payday loan companies love it. Okay, so what we want you to know is that you cannot be arrested for non-payment of a payday loan unless you present the payday loan lender with a hot check. However, you can be sued. So this is important. Regulations regarding payday loans vary from state to state. So if you live in one state and you think, well, I'll go over to my neighboring state, okay, and get a payday loan, okay, you better check them out and find out what their interest rate is and what their guidelines and laws are. So you must know and understand the regulations regarding the state that you take out the loan in. Okay, remember, the lender has to be licensed in the state he has given out the loans, and you should check those out before you go and get your loan. Unfortunately, with the COVID virus and the jobs lost and the hours cut, the payday loan business may see a huge leap in the payday loan business. So, Mr. D, you're going to tell us about credit cards, okay, and the good and the bad and ugly about credit cards.
Okay. Well, credit cards can be good things to have. Debit cards are bad things to have. Credit cards have a federal law that protects the consumer. If something happens, unless it's total fraud, the most they could charge you for a mistake is $50. I've never seen them charge anybody, period, on those. Debit cards that look a lot like it do not have the same protection. In fact, if the lender thinks you did something stupid and your account gets wiped out, they don't have to replace the money, and now you're going to have to fight back with no money. So credit cards are better than debit cards, but you can get in a lot of trouble easily because it's easy to charge on a credit card. Some of the things that people have heard recently on the radio, TV, the internet, is that if you have credit cards, you don't want to charge more than 35% of the allowable limit, or it affects your credit score, which is true. Now, the credit bureaus will tell you that. There's some people on the internet and YouTube and places acting like they know what's really going on, like it's some mystery. But the credit bureaus will tell you all these things, okay? And so forth and so on. But credit cards will get you in a lot of trouble if you don't manage them effectively. I like credit cards because I'm usually in a hurry. I don't have to carry a lot of cash. I get a receipt. I can make notes on that receipt about where to charge the account or the debt or payment, whatever the case is, off to what business situation. And at the end of the month, I keep all my receipts and I check them against the bill. And so forth and so on. Okay? So, this is the good, the bad, and the ugly. Is be careful. It can get ugly. Credit bureaus make their money selling bad news. They don't like us because we take the bad news off. Most of the other people can't take the bad news off. Now, one thing we should also tell you while we're talking about the good, bad, and the ugly is that you can try to get yourself out of credit trouble if you get into credit trouble.
Okay.
But the problem there is if you make a mistake, it is considered gospel. And if you make that mistake and then you come to us, for example, to get out of trouble, it's going to be a heck of a lot harder to reverse that. And if you go to a credit repair company that's not legitimate, in other words, what you probably didn't know is to be legitimate or legal, there are a set of laws called the Consumer Credit Protection Act. And that was passed in 1968. It's 8 sub-laws which regulate things like so-called credit bureaus. 2 of the laws regulate collectors. Really? When I tell people that, they say, why? I say, well, they're so evil that you need 2 laws. Actually, our marketing wizard here, Mr. LKF, says that these people are collection bullies. And they are bullies, because they're going to beat you up. Okay?
That is true.
So there's a lot of trouble with credit cards. It's the most trouble-causing thing probably in the credit industry because there's so many of them and so much around and easy to get into.
Well, one of the things we want to point out to you about the credit cards, so the good, the bad, and the ugly, is one of the things you need to avoid the following habits. Making late payments. Please think about that, because we are finding out now that a payment that you mail in can take as much as 8 days to get to the creditor and get in process and actually get your bill paid. Another problem is paying only the minimum amount of the payment. A lot of people do that. If you pay just a little bit more over the minimum amount payment that's being required, okay, that's going to help your scoring system. Okay, now, one of the things that you want to do is, some people have too many credit cards, okay, and you're not keeping up with it because each one of those credit cards has a credit limit. And when you go over that credit limit, you have really damaged your credit score. You can drop it really quick, okay? So, another thing too is if you're in a department store shopping, and they want you to open a credit card and they'll give you a 10% discount, okay? You can do that, but here's the deal. If you open a credit card in a department store, your interest rate is going to be higher than if you went home, okay, and got online and called that department store and opened up a credit card right there, okay? So keep that in mind. The ones that 10% you got, you really didn't get, okay? So there's a lot of things to think about with credit cards. One of the things that you might think about is a credit card the same as money. Well, when you pay with cash, you make your purchase and you hand over the cash and you got your goods and you leave and you walk out the door and you're done. When you pay with a credit card, you're borrowing money from somebody else and you're gonna have to pay it back. Okay, so keep that in mind because it's so much fun to go shopping and you get in the store and you're not thinking about where your credit limit is. Okay, and so you make a purchase and that purchase brings up your bill and you're on your credit card, and all of a sudden, boom, you're over your credit limit, and bam, you have dropped your scores right there. So you've got to be really careful and really mindful of when you're going shopping, what you're doing, because using the credit card is a convenience, but it can get you in trouble. Isn't that right, Mr. D?
That's true. That's why we called it, there's the good side, the bad side, and the really ugly side, which stays with you a long time because there are statute of limitations as to how long bad things can stay on. Most items are 7 years, but there